The information provided on this podcast is for informational purposes only and should not be considered financial or legal advice. Always consult with a qualified financial and or legal professionals before making any legal or financial decisions or investments. I look at it from this perspective, like as soon as I walk out the house, I'm generating revenue in some form or fashion. My shoes, my face, my chain, like I need this a part of my name, image, and likeness. But then also that's a part of me getting to, obviously, my podcast studio.
Yes.
And I got to drive there. I got to do these different things. I have to eat. I have to have these drinks. I have to have my computer.
Absolutely.
So all those different pieces, any ounce of one thing that I need, this mug I should be able to write off because I got to be able to drink, stay hydrated so I don't fall out while I'm talking to you. I get to write that mug off, right?
Yeah, now keep in mind, it has to be within reason. It has to be within reason.
No Free Lunch is presented by Piro Price. Athletes are making more money than ever. Between NIL and Supermax contracts, it doesn't look like it's going to slow down anytime soon. So how do athletes and the richest people in the world minimize their tax burden? My guest, Karlton Dennis, CEO and founder of Tax Alchemy, will help us answer that question. Let's talk about it right here on No Free Lunch. I am excited about this guest. He is a big dog homie, and I've enjoyed spending time with him and his family in previous days. He's a CEO and co-founder of Tax Alchemy, a licensed enrolled agent and based in California. But something you may not know, he is a former quarterback and played at Cal Poly as a Mustang. So welcome to my guest, Karlton Dennis.
Man, thank you so much for having me on the show. I'm excited to be here with you, man.
That's
Last time
a pleasure.
you were in LA too, you were competing for a Super Bowl, so it's good to have you back.
Yeah, man, we definitely have that combination in being athletic and being able to have some fun in that particular space. And I think one thing I want to talk about and educate our audience on is navigating the NIL space.
Yeah.
And it is something that's a hot topic. It's been a hot topic for a long period of time since it's really kind of been opened up, quote unquote, from the NCAA. What would you say a young athlete, woman or male, should be focusing on when it comes to whether they have $50,000 or multi-million-dollar contracts when it comes to NIL?
Yeah, man, first off, I'm so happy that athletes have NILs, man. When I was in college, I remember getting my little scholarship check and being able to cover my rent and having a little bit of extra money to go hang out with and have fun with. But we always dreamed about getting some extra money when we got to the NFL.
For sure.
And now you see guys getting paid almost NFL money right now. But I would caution all of them to be careful with their money because Uncle Sam is going to come in and take a good percentage of it. And most of them are unaware of who Uncle Sam is. It's not their friend. He's not somebody who has been at your Christmas parties or at your Thanksgiving dinner table. He is not your family. But when it comes to taking money from you every single year, he knows exactly how much he wants to take. And so most of these guys that are getting these contracts for the very first time have to immediately start thinking about, how do I structure things? How do I separate now the fact that I am a business owner from me, the individual? And this is when we look at establishing an LLC, a limited liability company. So that way we can start getting some proper asset protection and track the income and expenses in a completely separate bank account to keep things clean. That's the first step.
So with you saying that and being the first step of just setting up that LLC, what does that involve? Do you need lawyers? Do you need accountants? Do you need mom and dad to sign off on things, especially just turning 18 or 19 going into college? What does that look like? What does that process look like?
Yeah. So now, today's day and age, you could set up an LLC in as quickly as 30 minutes.
Okay.
But I always recommend the first step is to get on the phone with a CPA to make sure you're doing things the right way. Because you'll see now people on TikTok, Instagram are telling you to set up LLCs in the Cayman Islands to avoid taxes, set up LLCs in Alaska because there's no state income taxes there. But the truth of the matter is you're most likely going to set up an LLC in the state that you live in. And you're going to want to make sure that that LLC has the right address underneath it. When all of these NIL kids are starting to get their LLCs, what they make the mistake of, Ndamukong, is putting their primary residence address underneath that LLC. So if you're doing business with somebody, or you're sitting down to do a contract deal and they're looking up where that LLC is registered to, they're going to see that that's registered to your parents' home address instead of maybe a virtual address where you could just pick up the mail from a P.O. box.
And so would you say that is from a privacy perspective or from a function of the business perspective of why that address should be somewhere else outside of technically home or where you actually grew up?
Privacy and credibility. Because if I'm doing business with you, I want to see that you took the necessary steps to set up your business the right way and that you separated your business from yourself and you're running it correctly. And more importantly, privacy is the number one thing I care about, because if I'm doing business and I'm on the internet and I have a personal brand now, people are going to want to figure out, what do I have access to? And they start researching things.
Yeah.
They find out I have an LLC, they can find out where I live. And the next thing you know, you're on Google Earth and you're inside of my living room.
Yeah. And so with that privacy piece and really obviously setting up a correct shop or a place where you're actually doing business, is there a specific state or are there a handful of states that you say that you should be doing that from a privacy perspective and from a business perspective, especially if you're moving around and you're doing NIL deals in multiple states and multiple places?
Yeah. So first off, wherever you're domiciled is where you should set up your original LLC, because that's where you're going to be earning your income and filing your tax returns. Wherever you spend 181 days is where you should have your first LLC.
181 days.
Yep.
Okay.
And then after that, over time, what many people will start to do is they'll start looking at having parent companies own their operational entities. I like Wyoming because of the discretion that Wyoming has. It was the first state to ever adopt LLCs. And more importantly, Wyoming has a court of chancery that they've created.
Okay.
Essentially, it deals with business owner court cases, separate of you having to go into a juror with 12 random people having to decide on something related to a lawsuit. So it gives the business owner more protection.
Okay. Very, very, very nice. I haven't looked into Wyoming. I've always been kind of a Delaware person. So should I be looking at Wyoming?
I like Delaware, but Delaware has lost its sexiness over the last couple of years. And I think Wyoming has gained more favor for business owners, especially for investors.
Well, I'm sexy, so I got to get to Wyoming. Being a part of the NFL, and it's very interesting. Caleb Williams came in as a first-round pick for the Chicago Bears. He wanted to get paid in the LLC, but they refused. Hand, foot, tooth and nail. They fought him the whole way. What was that reason in your thinking? And why do you think that Caleb wanted to have his money being paid or his salary being paid to an LLC?
Caleb wanted to get paid through his LLC because he wanted to reduce his taxes, and he approached it from the sense of, if I'm an entertainer, that means I'm a 1099 contractor by entertainer definition. So I should be able to dictate how I spend my money before I pay Uncle Sam, because when you're a business owner, you get paid first, you spend money second, and then Uncle Sam gets paid third. But when you're W-2, you make money, Uncle Sam gets paid, and then you spend what's left over. He was trying to flip the table and say, you know what? I don't want the taxes to just be taken out of every single paycheck. If we route it over to an LLC, I'm self-employed, and now I can use expenses to try to mitigate my tax bill. I thought it was absolutely genius, but because the way in which his contract is written, he is the employee, so that's how he's going to have to get paid.
Wow, man. The things that the NFL league does not want us to know.
Yeah.
So let's talk a little bit about, as we've set this LLC up, now what do we do from a perspective of trying to lessen our tax burden?
Love that question. And the first thing you want to understand is the taxes that you're going to be subject to. When you're an NIL athlete, you're making 1099 income, you're self-employed. So you're going to be subject to 3 forms of taxes. You're going to pay federal taxes, Uncle Sam, we're all familiar with that. State taxes if you're in a state that taxes you, and self-employment taxes, which happens to be this hidden tax that most business owners are unaware of. Self-employment tax is a combination of Social Security and Medicare, and it comes out to 15.3%. But in Ndamukong, it's 15.3% on all of your business's net profit. So if I sign a contract for $100,000 with Gatorade tomorrow, $15,300 of that is automatically self-employment taxes. That's not even counting federal taxes to Uncle Sam or state taxes. And so over time, what I want business owners to do is not just get comfortable with having an LLC and the fact that you set up a business. Now we need to understand the taxes associated with that LLC, because we might be making it a pivot to the S corporation pretty soon. And that's right around $50,000 to $60,000 of business profit, where we start to transition that LLC owner into an S corp.
Okay. And so let's talk about S corps. And I'm assuming within that S corps, you're going to potentially have employees and things of that nature. Hey, my mom's booking my flights for me to go to this NIL deal and execute this. Should I put her on my payroll, or how should that particularly work? And then also, what are some things can I write off? Can I write off my food? Can I write off my personal training that I'm doing to stay fit, which is allowing me to have that NIL deal because they're using my name, image, and likeness because of my athletic abilities?
Yeah, absolutely. So first things first is the S corporation is going to immediately save you money in taxes. And here's the reason why. When you transition from an LLC to an S corp, that 15.3% self-employment tax that you were paying on all of that business profit, that dwindles down because now you get to give yourself a salary and you're cutting yourself a W-2 paycheck. What that means is you're only going to pay self-employment taxes now on the money that you actually took out of the business that you wanted to give yourself. So that may only be 30 or 40,000 that's now subject to 15.3%.
Yeah.
When you look at how entrepreneurs operate, especially new entrepreneurs, they want to help out family members, but sometimes they don't know the best advantageous way to do it from a tax perspective.
Yeah.
One of the ways in which we can help out family members while also reducing the tax of the business is employing family members. Maybe your mom is the one that's navigating you in to and from airplane flights to go meet up with people. You're doing sports events, podcasts. You're now an athlete that has a personal brand and you need somebody to help you navigate all of this.
Yeah.
Your mom could be that person, that manager or personal assistant on payroll. And now you're able to reduce your tax bill based off of the income that you're earning by being able to help family.
Oh, no, that's awesome. I love that. I mean, it's something that I think as kids and young adults, we don't realize how much goes into needing to have this type of structure set up for ourselves and the advantages of it because we weren't taught at a young age and we weren't exposed to this. And it's really to haven't even had the experience to be able to say, hey, let's have somebody walk us through this at a young age and understanding some of the different nuances of the tax code and whatnot. I learned very quickly when I got into NFL what the jock tax was.
Oh, yes.
So every single time I went and played a game outside of the city of Detroit, when I first got drafted there, I looked at my W-2 income and I got taxed in Chicago, taxed in Wisconsin.
Yes.
I mean, Illinois, Wisconsin, and any place that I played in, I got a tax bill from. Why is that?
Yeah, I'm glad that you brought this up. So for those of you guys that are unaware of what jock tax is, it's a fancy word for saying state income taxes. And when you think about how athletes or even entertainers earn money, the Beatles, right? They make a smash album, but in order for them to go make money, they're going to go travel and perform at SoFi Stadium, for example, or travel to Florida and perform. Same thing for an athlete. When an athlete has worked so hard in practice, training camp, now it's time for them to go perform. And when they make their most money is when they're on stage, on the biggest stages, right?
Yeah.
And so when you're traveling from state to state and you're performing in those states are going to require you to pay state income taxes because that is where you're earning your income. And so we see a lot of athletes getting pretty upset with the fact that their paychecks are kind of dwindled down a bit. And the real reason behind it is because they're getting penalized state by state by state based on the amount of traveling they're doing. Now, it does help you if you sign with the team a little bit. If you're signing with a team that's in a state that already doesn't have state income taxes, that can take off some of the burden in your own state. But you're still going to be subject to taxes in all the states you travel to that do impose a state income tax.
It's very interesting that you bring that up because as I learned about this in my days in Detroit, and I was in Detroit for 5 years, I was like, man, where am I going to go for my next contract? I would love to stay in Detroit, but I just had an inkling that something just wasn't going to pan out there. So I had an offer from Miami. I had an offer from Oakland Raiders at the time. And Oakland Raiders, I think, were going to pay me like $25 million. And Miami was paying me $20 or $21 million a year. Detroit, unfortunately, they didn't want to match it. They didn't want to get into the mix from that standpoint. But I said, let me go to Miami where I have an opportunity to win and turn around an organization. But a big reason why was because of Florida income state taxes, which is zero.
You're absolutely right, man.
So things like that, I think people have to understand is like, as you're moving along in your life, you have to take these decisions in hand as you're making a big lifetime decision of where you're going to go play your next career or where you're going to get your next job and what that ultimately looks like. So for somebody, as we called it, a jock tax and also an entertainment tax, somebody who's not in that field. I'm a photographer. I'm traveling around the world and taking photos, and I'm different state to state. does that also apply to them, the jock tax per se?
No, because a photographer is not to consider a performer. So a photographer can go and travel from, a country to another country, from state to another state. But at the end of the day, where is that photographer domiciled? Because when you file your tax returns, you're going to have to claim an address on that front page of your 1040. And that address is going to be associated to wherever you spend 181 days.
Okay.
And so if you're traveling all the time, and let's just say you're never home, but your place that you have an apartment where you pay rent is in a state that has no state income taxes, even though you may have traveled to a bunch of states that do have state taxes, because you're domiciled in a state that has no state income taxes, you will not pay state income taxes.
Wow.
Yeah, that's pretty awesome.
That's a great situation. I don't even might have to become a photographer. I like looking at birds and stuff.
Just put a camera in the bag with you when you travel now. There you go. You're a photographer.
Okay. I might have to show my wife, Cologne Media, I'm taking over. Let's go. When it comes to W-2 income and somebody trying to save money, and obviously W-2 income comes from a standpoint of being employed by employer and things of that nature, and something that I learned, and correct me if I'm wrong, if you have an opportunity, whether you're married or as an individual, to become a real estate professional or something in that particular space, can you offset those depreciation assets, especially from, like, my wife is a real estate professional and she sells houses and she's a real estate agent.
Yeah.
How can I benefit if I'm not in that same space from her having that job?
Yeah. So real estate professional status is one of the coolest things in the tax code, if you ask me. Why? Because you get the opportunity to create losses on the tax returns when you're cash flow positive that can offset working income, W-2 and 1099 income. But the IRS has this rule, real estate professional status. You have to show the IRS. And when I say show the IRS, you're really checking a box on a tax return. You're only showing them in the form of an audit.
Yeah.
But the rules state you have to spend 750 hours in a real property trade or business, kind of like managing an investment property.
Yep.
But the other part of the test is spending more time in real estate than any other working job that you have. For many athletes, it's really hard for them to justify becoming real estate professionals. I know that's something we'll dive into with you, but they have spouses most of the time that could qualify as real estate professionals. When you think about an athlete's salary being primarily W-2 outside of the NIL stuff, it's really hard to offset W-2 income other than putting money into a 401k or just giving it away to charities. And I think most athletes are already familiar with that. So then we start investing money into things that can offset our taxes, and real estate can create a deduction that's an active loss that can offset W-2 income. The issue, though, is the government has created what's called excess business loss limitations. All that means is that you're limited on how much you can take because you're W-2. $305,000 if you're single, $610,000 in losses if you're married filing joint is what you can max out to offset other forms of W-2 or 1099 income.
And so I know a little bit about this. After, when you get that maximum, that's in year one. What does that look like in year two from those losses?
Yeah, so the losses get to roll over. So whatever you don't utilize in that first year will roll over and be utilized in the next year, and they just travel with you. That's the one thing I do love about rental losses is you're never wasting them. You're getting to utilize them year over year.
No, that's awesome, man. That's something that I want to continue to talk a little bit more about, is just finding creative ways to work together as a household or even as an individual. If you have the grit and the grind, as a lot of people do, I can have multiple everybody talks about I'm a hustler. Yeah. Let's hustle. Like, so I'm getting my W-2 income over here, but how can I hustle over here to offset that to where I can receive more of that? And so as you mentioned to me, it's like, I looked at football, and especially like year 5, 6, I'm like, I love real estate. I grew up around it. My dad's an engineer. I was an engineer myself, and I really love being in the real estate game. But how can I advance that so that I can become a real estate professional? To your point of 750 hours, but also I'm at work all day in the meetings and doing everything. Well, guess what? Half those meetings, if we're in the building for 8 hours, we're really only doing 4 hours of things. During lunchtime, I'm taking Zooms. During practice, right before I go out to practice, I'm finishing up with an email. That counts. Yes or no? Yes, absolutely it does. Because what you're essentially doing is you're proving I'm spending more time in real estate than what I'm doing on the football field or even off the football field when I'm watching film or outside of training camp.
that time that you're spending matters so much, because let's just say I'm the IRS and I audit you. I can look at your paycheck and how much time you put in as an athlete. And then you have to have a real estate professional time log that also shows me how much time you spend managing your own investments or conducting real estate related activities. If this log does not equate to more than these hours, you do not qualify as a real estate professional under no circumstances. So by you doing that and being extremely active in the day-to-day, especially during football season, you're setting yourself up for when you come out of football season, knowing that you have more time to really focus on the real estate side.
So Carlton, we've talked about a bunch of different things, but give me a little bit of insight of what small business owners can do to find success.
So if you're somebody that's new to entrepreneurship and you have a side hustle, one of the ways in which you can reduce your taxes is by understanding the most powerful tax code, which is Code Section 162A. So Code Section 162A lets business owners deduct business expenses that are ordinary, necessary, and reasonable to the business owner in the pursuit of income. Now, Ndamukong, I talk to all types of business owners every single day, and most of them are like, Carlton, can you just send me over a list of all the things I can write off? Unfortunately, there's no list for your business of all the things you can write off, but there is Code Section 162A. And if you can convert your everyday expenses into ordinary, necessary, and reasonable expenses, you can reduce your tax bill. So for most people that are jumping into entrepreneurship for the very first time, they have a car bill, they have a cell phone bill, they have a house or rent that they're paying. These things are everyday expenses for the average taxpayer who's W-2, but immediately can become a part of your business expenses underneath Code Section 162A.
So Code Section 162, if I'm looking at it from a perspective of saying, I am starting a podcast and I have to travel around the world, but I also need to have a station and a setting up. What are the different things that I can, particularly based on that industry, write off of based on that code?
Travel, tools, equipment, meals. Right off the top of my head, I knew that those are the things that were going to come when you start a podcast. If I'm going to go and do podcasts, people are either going to meet with me or I'm going to meet with them. So I got to travel. My airfare, my Ubers, that's all deductible. If I need to set up my S&B 7 Pro mics to a boom arm with, Sony FX cameras, the cameras are deductible as equipment. The boom arm is deductible as equipment. The S&B Ensure 7 Pro is deductible as equipment. The TV is deductible as equipment because it's all a part of how I'm going to generate revenue. And I think that's the most important part that the IRS would say if you were ever audited. How did you buy this expense to generate revenue?
So let's say this, I look at it from this perspective, like as soon as I walk out the house, I'm generating revenue in some form or fashion. My shoes, my face, my chain, like I need this a part of my name, image, and likeness. But then also that's a part of me getting to obviously my podcast studio. And I got to drive there. I got to do these different things. I have to eat. I have to have these drinks. I have to have my computer.
Absolutely.
So all those different people, any ounce of one thing that I need, this mug I should be able to write off because I got to be able to drink, stay hydrated so I don't fall out while I'm talking to you. I get to write that mug off, right?
Yeah. Now, keep in mind, it has to be within reason. It has to be within reason. Okay. I hate to be the bearer of bad news, but when you think about, business owners day to day, the IRS cares about you following the necessary steps to show them that the things you're spending your money on are actually linked to you making money.
Okay.
If I just chose to wear, a Dior short today versus, a regular t-shirt, Hanes t-shirt, that was a choice that I decided to make, but the t-shirt may not be a part of my uniform of how I conduct business. The IRS has a rule around when you write off clothing that they want it to be a part of your uniform. One of the things I do to help small-based business owners make more things a part of their uniform is we like to embroider our logos and our names on our jackets and our inner circle pockets. And I also write into the operating agreement the types of clothing the CEO or executives are going to wear. So that way, from an IRS looking in, it's almost as if I've already set up the entire scene. I already wrote in the operating agreement we were going to buy clothes inside of the LLC operating agreement. I said we were going to have luxury because that's the type of brand that we have. It fits our brand demographic. And because of that, that's part of the reason why we spent $4,000 on an Italian soup. But inside of the coat pocket is my logo and name and information.
Okay. So
tax deductible.
Just remember this. No free lunch is pure luxury. That's all you need to know. Pure luxury.
That's right. Absolutely. And we always are premium.
Yes, sir. I appreciate that.
Yeah. Do you get athletes that talk to you about their private family foundations? Because I know we set a lot of those up.
I wouldn't say I have a lot of athletes but I do know everybody as they come into the league, it's like a know-how, or it's really an unbeknownst rule, like I make money, play in the NFL, play in the NBA, WNBA, NWSL, I should have a private foundation.
Mm-hmm.
Why is that?
Yeah. I mean, when you think about it, you're going to want to figure out ways to give back, especially if you have a personal brand. Most people look to athletes to create something to give back once they've reached that status. But on another note, it's a great tool for reducing taxes.
Okay.
The reason why I say that is because most athletes don't have write-offs and they want to be philanthropic, but they don't want to give away all their money at once.
Mm-hmm.
So you can write a check over to your private family foundation up to 30% of your adjusted gross income. That means if I have a $10 million a year, I could send off a check for $3 million to my foundation and it's sitting in the foundation bank account that I have control over.
Yeah.
Like I can go and put an Amex credit card attached to that bank account.
So it's key. You said private foundation.
Private family foundation.
Why should somebody have a private foundation versus a public foundation from that perspective?
Because when you have a private family foundation, you can make it non-performing. What that means is you don't have to tell the world yet what you wish to do philanthropically, but you can operate under 501c3 regulations. So I can go park that money inside of my private family foundation. And Ndamukong, I don't have to figure out what I want to do philanthropically yet.
Yeah.
I'm still going to get that 30% deduction on it as long as I contribute 5% of what I put into the foundation to another qualified 501c3 other than myself and I make a donation.
Yeah.
I'm within compliance. So this allows for me to control money until I figure out what I want to do with my foundation. Why would you do that? Because as you're controlling money, your foundation can make investments. There's no capital gains tax inside of your foundation. Once you grow the foundation, maybe by that time you have an idea of how you wish to give back. And that's when you start incorporating some of your family members and board members. And now they earn salaries to work inside of your foundation. That's an income shifting strategy to people who might be in lower tax brackets than you through a foundation in which you got a tax write-off for.
Okay. Wow. That's impressive.
Does that make sense?
It makes a lot of sense.
Yeah.
501c3, private foundation, family foundation.
Yes, that's right. Private family foundation. Yeah.
As young professionals come into this arena of being young adults and understanding what they need to do, what would you suggest for them to do when it comes to starting out and being able to say, hey, I may not be able to be with your level as I'm lucky enough to work with you and do some different things, but where should they start?
Yeah, absolutely. I believe in finding people that are already doing the things that you want to do and are living life the way you see yourself living life. And you go and spend time with those people and learn exactly what they're doing. We make the mistake sometimes of immediately rushing to our parents or people that are in our ecosystem, and then your parents are going to reach out to that person from high school that they found out became a financial advisor, became a banker, and put you in touch with somebody that's never made the type of money you're making or even understands what you're dealing with. And you get this half-ended advice and make decisions based off of people you have trusted.
Yeah.
Sometimes if you want to go to new places that your family has never been, you have to be willing to step out of the familiar and go to the unfamiliar. And I think if you surround yourself with the right type of people you aspire to be like, and you humble yourself and you go and let them know exactly what your intentions are, those people will open doors and throw down ladders to lift you up. Yeah. I think that's where you start.
Man, that's about super powerful. Just because when I look at it as an individual and my time through professional career, mentors were key to me and people that I aspire to be, whether it's Warren Buffett, Gary Schiffman, Joe Moglia, all these different guys, Jay Brown, like seeing their success and then not being afraid to go ask them questions and say, hey, can I be within you? Can I just follow behind you? And I remember Jay Brown sitting here in LA, he was like, man, of course you can come sit down. You can come sit in the office all you want to. And I'm happy to teach you that because he's already reached success. And he's like, I'm happy to pass you that information. I have time to do that now. And I mean, some of those most prized relationships are the ones that are mentors.
Yeah, you'd be surprised how successful people are forthcoming to wanting to help you when you humble yourself and you approach them the right way.
Yeah. And you respect their time. That's the one thing I don't understand about the professional sports and how we look at things. It's like, humbling yourself to be able to wake up early or stay up late and learn behind somebody just so you can educate yourself.
Yeah.
It's so simple.
Yeah.
So simple, but so hard sometimes.
Absolutely. Because you're so used to one thing, doing sports and showing up to the weight room and going to the ice bath. You've created this routine, but your routine isn't going to help you once football is over and you can't play anymore.
Yeah. And a lot of us are enabled in being able to have everything that's provided for us.
Yeah.
And which is unfortunate, but we got to find ways to be able to break that habit.
Without a doubt. Yeah, man.
Learn to be uncomfortable. One of the best to do it, man. I appreciate your time, Carlton.
Of course,
man.
brother. Appreciate
Always
you.
good to see you.
Always good to see you too, man. We got to get this going in Turks and Caicos.
No doubt. We're going to do that for sure.
I'm bringing the microphones.
Yeah. I know. It's
I'll
all
bring the
me.
microphones to Turks.
This segment is brought to you by T. Rowe Price, and we would like to call it our Curiously Confident question. Building good credit is foundational to anybody and everybody, especially if you're looking to buy a home or lease equipment for a small business. So today, my Curiously Confident question of the day is, which answer positively impacts your credit score? A, good payment history. B, minimizing your credit utilization. Or C, all the above. The interesting thing about that question is I remember back in elementary and middle school and high school, when you see all the above, it's typically the answer. So that is actually the correct answer, all of the above. As I mentioned earlier, buying equipment. I love construction. Went to school for construction management engineering and graduated kudos to myself. But ultimately, it gave me an excitement to be in and around the construction industry. And one of the things I did was use my credit to buy an excavator. My kids love it. I love it. And I love using and learning how to use it. And so I went to CAT Financial and they gave me a full-blown tricked out excavator all on credit because I had a great credit score and I have a great payment history. And that's your T. Rowe Price Curiously Confident question of the day. No Free Lunch is presented by T. Rowe Price. T. Rowe Price proudly sponsors No Free Lunch. The views expressed in this podcast are those of the hosts and guests and do not necessarily reflect those of T. Rowe Price. Our sponsorship supports the platform and does not imply endorsements of specific content or perspectives. Man, it was a pleasure talking to my guy, Karlton Dennis. I'd probably say my biggest takeaway that everybody should consider is finding you an amazing tax strategist and accountant that can help you minimize your tax burden. All right, everybody, that's our show. Give me any feedback and any suggestions for new topics that we should discuss and who you may want to hear from. Like, comment, and subscribe to No Free Lunch on Apple, Spotify, and YouTube, or wherever you get your podcasts.